Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 4-hour chart of Euro USD in front of us. But before I proceed with the chart, I would like to show you the forexfactory.com or any economic calendar you can choose. You can see that today we have a news during the US session. So my dear friends, please be careful with your US dollar positions. Initial jobless claims and employment change year on year, quarter on quarter on euro. So you need to be careful, extra careful today with all your euro positions, because after 4 hours you can see that a news is coming on euro, then you have a news on US dollar. So be careful, follow proper risk management, strict risk management today. The initial jobless claims data does not have the potential to change the direction of the market completely, but yes, there will be some volatility for some 3 to 4 hours, 5 hours. So you need to be careful during that span of time. And yes, euro will also be volatile, so please be careful with your other euro positions. Okay, so let's get started. First of all, let's look at the chart of DXY. Then we can clearly see that DXY is still inside the symmetrical triangle pattern. As we have already discussed yesterday, that symmetrical triangle is a bilateral pattern. Bilateral pattern means a breakout may come towards the upside as well as towards the downside. We cannot be sure of. For example, ascending triangle pattern is a bullish pattern. Descending triangle pattern is a bearish pattern. But symmetrical triangle pattern is a 50-50 pattern. Okay, so you need to be careful. So if the breakout comes towards the upside, then DXY will have to cross 104.70. If DXY crosses 104.70, then only we will be confirmed that DXY is still in uptrend. And on the other hand, if there's a drop on DXY, then 103.20, 103.40. These are the levels that will try to hold the market. So let's wait and watch how DXY performs and reacts after the data. Okay. Now let's look at the chart of Euro USD. So if you look at the 4-hour chart of Euro USD, then after the downtrend, there was some trend reversal signs. But again, we can see that market looks confused, market looks messed up. So as a result, we need to focus on the lower time frame. We need to focus on trades that will last for a couple of minutes to couple of hours only. So I have switched to the hourly time frame here. This you can see that unlike other videos, I'm not using 4 hours time frame because I'll be using the 1 hour time frame only to understand the chart better. First of all, Euro USD is standing at 1.0709. As we can clearly see that there is no clear direction in the market right now, and moreover, market is also standing on the middle of the chart. So obviously this is not the ideal position to execute any buy or sell, because our risk to reward ratio will not be in our favor, and most importantly, we do not have any clear direction. So if we take any trade right now, it will be like a gamble. So we are traders, not gamblers. So we should be trading on levels that we can understand. First of all, we have a good presence of buyers or support around 1.0670, around this area, 1.0670, 1.0665, we have support. We can see that when market came down to this level previously, market has received some support. So next time or before news, if you see that Euro USD is taking support around this area, if Euro USD is showing price ejection from below around this area, we will get the confirmation that buyers are still present and you can look for a buy position. At least you can expect if you take a buy around 1.0670, at least you can expect a target of 1.0700, means a trade of 30 pips, 35 pips. Similarly, if Euro USD move up, okay, if you see that Euro USD is going up, then we have some sellers present around 1.0740. This is the first resistance on the chart of Euro USD. Before news, if you see that Euro USD is going up, but the size of the candles are like this, means that market does not have much volume. In that case, you can expect 1.0740, 1.0735 to act as the next resistance, and you can look for some sell. If you see the market is struggling around this area, market is showing price rejection from above. On the other hand, if market shows big candles like this, then obviously this level will not work. So see, trading and common sense goes side by side. So if you see the market is going up with big candles, obviously you should be avoiding any buy position around this area, and you should be looking for some selling pressure around 1.0760 to 1.0770, the level we also discussed in our previous videos. So these are the two levels on the chart of euro dollar right now, so where we can expect some selling pressure. 1.0760, 1.0770 seems to be a better level because we have good price rejection around this area, as well as the same level work as the support. So previous support will be acting as the new resistance, as well as some strong price rejection was also seen previously. So 1.0760, 1.0770 seems to be a better resistance in comparison to this level. So volatility of the market will decide, okay, which level will work for the day. And if you look at the chart precisely, then my dear friends, we can see that right now market is struggling to cross the 200 moving average here. After a few hours, if you see that Euro USD gains some momentum and buyers are back in the game, then you can also look for a buy position around above this level. But this level is little bit risky. Personally, I will not be going for a buy, but still it's my duty to suggest you guys. So I'm suggesting that yes, there is an buy opportunity above the 200 moving average. At least you can expect a quick buy opportunity. At least you can expect 15-20 pips around this area, because see, what I have spotted here is that we have more or less double bottom kind of pattern here. Okay, so already market has given a breakout, but right now market is facing some pressure around this area. So if market breaks this level here, then more or less you can expect a clear road here. So there can be some buy above the 200 moving average. So if you're an experienced trader, if you know how to manage the risk, then you can look for some buy around this area. But if you're a beginner, then try to avoid these kind of trades. You should mostly focus on levels that are easy to understand and that are more reliable. This is not a reliable trade. Okay, so that's all from my side, my dear friends. Be careful during the news. Bye bye, take care, follow proper risk management. I can be wrong as well. Do not gamble with your hard-earned money. Do your own research analysis. Bye bye, take care.